All right, what's up, traders? How's everybody doing on this fantastic Thursday that was supposed to stop? Give me a second. All right, there we go. No more music. We don't need music. Yeah, we're going to cover Tesla and a lot of other things because the markets are definitely on the move. We got 1 minute to the bell, so if you're wearing headphones, you might want to pull them off for just a second, as I cannot control how loud that bell is. Let's go ahead and look at Tesla. Well, I guess I should actually type in the ticker, the correct. We are falling pre-market and we fell post-market yesterday, pre-market. Currently trading under support. Tech is not doing so hot right now, that's for sure. So we'll keep an eye on it. It says pre-market is down here at 257. We closed at 260, 259. This is the area that I expected it to hold, but we had a Fed meeting yesterday, and that Fed meeting, even though he was trying to be dovish, he essentially said that the gap for a recession is getting more narrow or widened. So they don't know if we're going to go into a recession or not. So the markets are taking that pretty heavy. I do have the MES pulled up over here so you can see that we have breached the expected move once again. So like I've been screaming for the last several weeks, even though the VIX is not up, volatility is definitely upon us. All right, usually the option market does pretty good at pricing in this kind of stuff. All right, let me check something over here because, yeah. Everything was fine and dandy before I jumped on the live stream. With the speed test, it looks like we are dropping a few frames. Damn it. Give me 1 second. Such a pain in the ass. All right. It's because I got so many platforms open at once. I'm almost positive of it. But anyways, yeah, Tesla getting a small bounce here. Maybe you could watch for a gap closure and then see what happens. Yeah. Remember when you trade Tesla, whether you're trading the outright stock or puts or calls, this thing moves and it moves quickly. As far as Bitcoin, I mean, it's right. It rolled over right at the level that we were speaking of yesterday while the Fed was talking. And I was definitely leaning to the short side of this trade. Basically, this was just another lower high move to the upside, which will entice sellers. Now, it was a pretty decent move, and we are currently testing the 21 exponential moving average as it comes right in this range here. If we lose that, then this is definitely going to look more and more like just another lower high, and we could look for expansion lower. So you should position yourselves short on futures. That way, your overall Bitcoin holdings doesn't suffer as the price continues to decline. Bitcoin lost its bullish structure a while back, and we've been all over it since that. Remember, once we lost that weekly 21, I was telling you guys that, right now that's not the structure we want to see. We want to see weeklies closing back above that yellow line. As long as, that monthly support is acting as resistance, then that's the area where you should look to be a seller. I mean, the last time we had a pop up there, it was immediately rejected. That's not a sign of strength. That is a sign of weakness. There is the 200 exponential coming in down there at the bottom, which essentially held Bitcoin to sideways markets for several weeks. And then last week we got that bullish push. This week we got the bullish push up until yesterday. And yesterday was when we had the speech. So essentially, that was the area to look to get short. A couple of Trade Talk members were able to get in, basically watching this hourly res right under there. I said if you close an hourly above it, then be careful because you could be seeing, prices spike up to there. But that was never a fear because it rejected, traded sideways, rolled over, popped back up for a brief second, and then just flat out is plummeting. And like I said, we've already breached the expected move on the S&P 500 for the week to the downside. So will we see a pop here? Well, if we do, you can bet your bottom dollar that I'm going to be looking for shorts. So this is what we currently have. We are trading above the intraday 21 exponential. This is an ESD band. It is not a Bollinger Band. So it's not a 20 simple in there. It's a 21 exponential. And then this purple dotted line is going to be your VWAP. So anytime price jumps up into that VWAP, if it even shows any sign of struggle at all, I will enter a new short position. I cannot trade options right now on stocks or index products because I exceeded the pattern day trading rule. Thinkorswim literally won't allow you to do that. They'll stop you from exiting your position. That happen on tastytrade. If you do exceed the 3 day trades per week, you do get one chance only to basically say I'm sorry and reverse it. If you do it again, no, you will not be able to do anything with the account. You'll just have to create a new account or something, and we're not going to go that route. So I will pay more attention to that up there. But this account is basically about learning how to trade and teaching you guys, showing you guys that it is 100% possible. So the only position I am currently in right now is a short call on the futures. Now I can day trade futures. I can take 27 trades a day if I want to on the futures, any futures, right? Corn, wheat, oil, whatever. I can trade those things, so I will continue to do so. And a lot of those futures products offers options, and they are liquid. All right, so yeah, that's what you got to do with a small account. This requires a lot less buying power to just set short and collect premium over time. I can't remember exactly what it was that I was going to be collecting on this trade, but we can just simply times 18 by 5, so $90. That's in line with what the P&L was at the time of taking the position. So once we get to $45, we'll be at 50% profits on that trade. I will look to close it out. I will wait for a daily bounce or two, and then I will execute another short call and buy a put. I'm not going to buy a put down here. The reason is because we have exceeded and breached the lower edge of the expected move. And as I've seen many times before, the price of the asset which has breached that lower edge tends to trade slowly back to it, by the end of the week. Now, we have seen continuations occur before, right, where you breach and then you stay breached for the entire week. Well, today's Thursday. We got one more day of trade left. So is it possible today just pulls back midpoint or, like I said, to the intraday VWAP and rolls back over, and then we see another red day tomorrow? Absolutely, it is possible. I don't know what price is going to do, so I can't tell you how to position yourself, right? But if I were you, every time you get a pop from here on out, I would probably look to position myself bearish, whether that is selling calls or buying puts. If you buy puts in the underlying, such as Tesla and Nvidia, Microsoft, Amazon, understand that those things move very quickly. They move very quickly. Now, what I got pulled up here is important. All these red lines are when the Fed has had their speech. Basically, this over in here was the first time that we had a pop from the CPI. Instead of basically your headline CPI number going down, this was the first CPI where headline actually increased. And also on this CPI day, the core CPI only dropped 0.1%, moving from 4.8% down to 4.7%. And the market put in this massive move to the downside. Now, this low is what I'm calling the first CPI low, has been held. It's stayed intact because price immediately traded away from it and then went up and smoked the CPI high. It did not take out this high. It only took out the CPI's high. And then it rolled back over, traded back up. This was our last CPI print right there. It was bullish. We get the CPI out at 8:30 pre-market. So the market was bullish all that day. And then we had this. Boom. Right? Usually the move comes the day after. We're seeing that we did have yesterday. I took a live trade on the ES minis or the micros, basically entering somewhere up in there. And my target was the previous day's low, which was this right here. You can clearly see that we not only took out that target, but we did get more downside continuation. And from today's open, you got one little speck to the upside and boom, she's been dropping. So on the daily time frame, it does look like we are in fact rolling over. This was a symmetrical triangle formation. We have breached it to the downside with downside continuation. So I am expecting at some point this low to be taken out. Now, if we go over here and we look at the ES contract, you can see that we are further away from that low than we are the S&P 500 CFD product. All right, so that low comes in roughly around 43.50. If we pull up this and go back to the grid, you can see current prices are at 44.09. So 43.50 is where it has to get in order to breach that low, and that is right here. All right, so if price trades down to there, we will have taken that low out, and it is within this product's capability to do that. Probably not tomorrow, right? Now that everybody's extremely bearish because, even though he was trying very, very hard to be dovish, and he sounded dovish, he was like scared almost, right? So they obviously are not telling us the full story. I'm assuming that any hopes for a soft landing is probably gone out the window at this point. The market will not like that if any Fed official comes out and says essentially what I just said, that there probably will not be a soft landing. He alluded to that fact yesterday, but he said he just doesn't know, right? And that's the important part. So markets never like uncertainty. And basically, it's just been pricing in those CPI numbers. Now that we've gotten the Fed and they've spoken, the market has had some downside continuation. So Bitcoin, yeah, if the rest of the risk markets fall, Bitcoin's going to fall right along with it. I was unable to get positioned in that trade yesterday because I was monitoring the other trades that I was in. I am still short the pound dollar. You can see that the pound dollar is having a nice move to the downside. What I'm doing here is I'm essentially long dollar. I am long USD CHF. The SNB came out and they were expected to hike rates by 50 basis points. And you can see right here that they did not do that. They paused. All right. Last month we were at 175. This month we're going to remain at 175. So we still have the BOJ. BOJ will affect the markets if they come out and do something like this, right? If they don't do what's expected. I'm not sure. Yeah, the BOJ monetary policy statement. It's going to happen tonight at like 8, 9 o'clock, 10 o'clock, somewhere in there. And then there's your interest rate decision. So be careful holding any positions overnight tonight, simply because if they do something crazy and raise interest rates, then the Japanese yen's going to get very strong, and that's going to affect a lot of things. So I know people are taking shorts based on that fact, hoping and praying that the BOJ does something, but in the past, they have not. All right, they have not done anything. So they're continuing on with their monetary policy, and with that wide of a spread, we're sitting at 5.25%, 5.5%. They're sitting at 0 point negative 10%. That is very nice for carry trade. All right, so that's why this asset has just been going straight up for the majority of 2023. And one other position I am in is the Aussie dollar short. So, I mean, this thing hasn't really done anything since making a fresh yearly low. This was your fresh yearly low right here, breaching of that. Since it's done that, it has literally traded sideways in this wedging formation, but also giving a couple short entries up there. So looks like maybe we're going to see further downside continuation on the Aussie dollar. Some people will call this a descending wedge, and those are typically looked at for bullish breakout potentials. But to me, it just looks more like a channel, right? So, and I've seen these descending channels get broke out to the downside many, many times. Here is your Aussie yen finally taking that move and rolling over. This doesn't have anything to do with yen strength. It is mostly Aussie strength. If we pull up our currency futures here, you can see that the Aussie is the weakest out of everything. It is almost a whole percent down on the day, followed by the SNB, or the Swiss franc, right? The Swiss National Bank. You're setting at 0.93%. So that move to not do anything on the SNB's part is really, really helping that long USD CHF that we took live here several weeks ago. All right. So moving on, Japanese yen is it's just barely up, right? It's 1/10 of, or not even 1/10. It's 1/100th of a percent up. It's like one tick and will make it down on the day. So it's the Aussie's weakness that's making Aussie yen roll over. Can you look to short the Aussie yen if we get a pullback? Right now, the structure is bullish. Pull it back up here. It's still structured bullish. So you don't necessarily want to short assets that have this kind of structure, because they can bounce and start back on their bullish trend. And all you would need is a continuation of yen weakness, and for the Aussie to just strengthen up a bit, and you could see this thing move back to the upside. However, it's been trading in a massive range for several months now. All right, so it's not really doing anything. I think there are better things to look at out there. I mean, just look at this massive range from 89, well, if you count the low, but from the yearly opening range to resistance, you got about 5 cents in there. So just a big range, very big range, but structured bullish, right? That's the most important thing. Here's your weekly chart. It is structured bullish still. Daily chart, structured bullish still. We've got one good down day. Aussie yen typically does like to break down when the markets do, but it doesn't always, right? But we are getting downside continuation on this. I still need to see it pop to the upside before I can short it. I cannot short the lows, and I damn sure am not buying the lows. All right? I'm not buying the lows. I have that call position, that short call position, that as long as this thing keeps trending to the downside, it will end up paying me. I can close it, wait for an update, and reapply it, and just continuously collect premiums on the way down, and also buy a put, because buying a put in this circumstance would actually make more sense than selling calls, because if you will get downside continuation, you can make a lot more money without tying up some margin. So if we were to take this at the midpoint right here, it would tie up basically $600 a margin, and your max profit would be 21,000, but that's only if the S&Ps go to zero. Remember, on the downside, you can only make 100%. You cannot make more. It can only go down so far. But that's a position that you could take as well. On the NQs, the micro NQs they don't have as much liquidity as the micro ESs does. I was looking at them yesterday, and they have very wide spreads. And once again, you want to go out far dated. Far dated. You're looking at a $10 wide spread. Yeah, not very much liquidity there. And then if we look at open interest, why is that so fat? If we look at open interest over here, you can see that there's not many participants over here on the put side. However, there's quite a few people on the call side. But, typically retail is wrong. All right. But if you do want to do that, that's fine. I mean, your risk is capped, right? By just buying a long dated put. You will lose premium even if you're in the money. Even if you're in the money. Because when you go out that far, your theta is being priced into the premium. So each day that goes by, you will lose, a few cents on a daily basis, no matter which direction the market goes. The theta will decay. It does. That's what it does. That's why I sell calls, right? And puts occasionally. But right now, selling a put would be probably close to death to anybody's account. Because if this thing really starts to get rocking and rolling to the downside, like you could buy a way out of the money put and you could be there in 2 days. Remember, it's a staircase to the upside, usually jump out the window to the downside. It's usually how those things work. All right, you can go back in time and you can, what did I just do? You can go back in time and you do this. Move to up. There we go. Thank you. You can see how the markets, when they start to crash, they really come off. That's why selling puts isn't advised. Buying a put would be advised. Also, I want you to do it before the VIX gets higher than it is. Right now, you're setting at a $16 VIX. Obviously, buying puts on the SP products would have been much better at a 13 VIX than it is at a 16 VIX. But I do not want you guys buying puts when the VIX is trading above 20 bucks. Because what you're going to do is, even if you're right, you can, on direction, you can still lose money if the markets turn around and start to go back up, because the volatility is being priced into the premium. So it's better to buy puts at a low VIX down here. Anywhere down here. This is where you want to start looking to buy puts, regardless of what the market is doing, because your risk is capped, right? And you can set a limit order to where if the market moves against you and that put you bought is at 1% underwater, it'll go ahead and automatically close the trade out. And you've risked 1% to potentially make 1,000%, right? That's the best way to do that. A put is for insurance. It is not to make money. It's typically not supposed to make money. But we know that they do make money occasionally. Sorry, I had the microphone off. You could take them by a put spread on the Meta, is what I was saying. I like doing that better than, say, on Google, because Google has already made a pretty decent move to the downside. Maybe if Google comes up here and fills the gap at 134, we'll put on a put spread. Microsoft has already came off pretty decently, so I wouldn't necessarily look for downside on that one neither. Neither would I on Nvidia. I understand Nvidia had the best run of the year based on AI hype. However, it has also already came off some 17%. Okay? When you're looking for downside opportunities, you want to look in those assets that haven't had that big move yet. Netflix, out of the question. Tesla, not so much. But it needs, like, yesterday would have been the best time to put on a put spread. Obviously, it's easy for me to say that in hindsight, but we were bared up yesterday, right? Anybody that was watching the live stream knew that we were bared up. We were bared up on Bitcoin. We were bared up on tech, bared up on the SPs. So whenever I'm bared up like that, when I'm heavily bearish, like I have a short call and I'm short the underlying asset itself, those are good times to look for put spreads. If you don't know what a put spread is, it's simple. All you got to do is, let's pull up Tesla and go down to the trade table. You got earnings, so that's a risk, but you can come out here, 29, 30 days or something, and then just buy, say, go out of the money. These are $5 wide ticks or $5 wide strikes, so you got to be careful. But what I would do in a situation like this is I would on a push up, like on a very up day, a nice strong up day, I would come in here and I would buy the 260 strike, and then I would sell the 250s. Now, what that's going to do is it's going to give you a max loss of 495 and a max profit of 500. So it's just a 1-to-1 risk to reward. But if Tesla starts to dump, it's a quick $500, right? Right. That's the point. Instead of just buying one put and risking $1,900. Because remember, you are risking the entire amount. It doesn't matter if it's in the money, because if price goes up, this will drop out of the money. So you have that risk of it actually going to zero. And if you put a $50, say if you got a $5,000 account and you're trying to stay roughly around that 1% loss ratio, Tesla will hit a $50 on their puts with the snap of a finger. All right, so that's why I suggest you put on put spreads. All right, they're vertical spreads, in-out spreads. It's just a spread. You're using the same expiration, right? Same expiration, and it's a vertical spread. You can go out of the money and do it. It might make it a little bit cheaper. Instead of going for a $10 wide spread, go for a $5 wide spread. You see that? Your risk is 232, where your max profit is 266. But let's go to the call side. So, and do the same thing. So we want to buy that. Sorry, we want to buy this and then sell that. So there is the skew is still up, so it's still better to do it on the call side. You can see that the profits are more than the loss. That's because the skew is still up. And the reason the skew is up is because so many people are now doing those zero to expiration options, and a lot of people are hedging, right? How do you hedge? You buy puts. So it skews everything. If the skew is up, the VIX is down. If the VIX is up, the skew is down. All right. So, but if the VIX is up, like I said, the premium, the implied volatility on these assets are also going to go up, and that will be priced into the premium. So if you do get an up move, right, prices move up, this implied volatility goes down, all right, and you'll lose money. That's why, yeah, that's why you need to know a little bit about options before you just randomly start buying way out of the money puts on a Hail Mary call. You can do that, right? I see no problem in coming way out of the money buying a put. Just understand that the probabilities of that option making money are very, very low. In fact, just coming down here to the 205, there's an 87% chance that you will lose your entire amount. 87% chance. All right, that's out of the money percent chance. There's an 87% chance this strike will not be in the money, is what that's essentially saying. So, yeah, keep that in mind. But as long as Tesla doesn't start to drop too bad, like I said, Meta is probably going to be the favorite as long as it slows its roll. All right, let's check Amazon. Yeah, Amazon has already dropped entirely too much. Apple has been absolutely wrecked. So Apple's out of there. I mean, you should have been buying puts on Apple a long time ago. Nvidia, same scenario. It's already under the 50. Tesla is not yet under the 50. And Netflix is well under the 50. It's under the 100 even. And Netflix has suffered about as much as Apple has. So, yeah, on up days, though, I see no problem putting on spreads. All right, it's a way to capitalize on the market and limiting your downside risk, which is what you're supposed to do when you're trading these markets. If you are new here, which probably not, there, because most of these are people that are always here. There are a couple videos that I made about options. I'm gonna make more. I just haven't really had time because, like I said, the markets have been moving, and whenever the markets are moving, I'm trading them. I like to trade them. Let's go look at Cisco real quick. They bought a company called Splunk, I think. Splunk. Yeah, the market's not liking that at all. Cisco just literally took a tumble all the way down to $53 based on that acquisition. So if you were holding Cisco long, I mean, I'm not saying that the markets are crashing. I'm not saying that at all. I'm just saying that they're red. And ever since those CPI numbers bounced, the markets have been rolling over. They have not, you had a couple weeks of two-sided trade, which is fantastic because, I like two-sided trade better than one-sided trade, unless I'm positioned for that one side. If I'm positioned for the one side, then let them drop. That's my philosophy. If I'm short, I just let it go, let it drop. But I need an uptick in order to get short to get long a put, right? And even though, like I said, even though I can't trade stocks, I can trade futures, and options have futures. So what I'll do is, if we get a bounce up today or tomorrow, near the end of the day, I'll look to buy a put on the MES. On the MES. Good morning, PXD long. Please, let's go look at it. No. I don't know, man. I don't know what it is as far as, what they do or whatnot, but you're under the 200, right? You're under the 200. You could take a chance on it, but I mean, if the markets roll over, it looks like this thing did the same thing, right? It set a bear market low in 2022, and then around the open of 2023, it got a nice move to the upside, and now it's coming off. It's doing exactly the same thing as other markets. So I would kind of hold off on any Like, and plus the momentum. Look at the momentum. Like, you went from overbought to oversold in just a couple weeks. So wait for like bullish divergence or something like that before you look to buy it, because then you might get a bounce based on the technicals. A bullish divergence that would probably bring in some buyers, but right now, while you're cooking with grease to the downside, I mean, one could argue that the last 3 days you've put in bullish divergence, but I'm not talking about that. I'm talking about like a real solid divergence. So from this day and this day, you've already put in a very tiny bullish div, right? Let a bigger bullish divergence build in there. See if you can start closing dailies back above the 200. Does the 200 act as resistance? If it does, then yeah, maybe so. What happened to the live stream? We're still live. PDX, not PXD. Oh, sorry, not PDX, PXD. This one's got a lot of momentum too. Yeah, I got you. I got it. This one's got a lot of momentum down too. The last 2 days have been brutal. In fact, if you would have shorted the 21 test, you would have been up nicely today. In the near term, whenever we lose the 21, we don't like it. If I'm going to be a buyer on a stock, I want it to hold the 50. So at best case scenario, you bounce off the 100 and then close dailies back above the 50. If that occurs, then you could potentially be a buyer. All right. But as you have bearish momentum, the bears have control of the asset. So you're trying to buy something that, it is pulling back, which is typically when you want to buy, but right now the economy just isn't suited for buying the dip, I don't think. Obviously, that's my opinion. The dot plots showed that there was a potential rate hike coming in for 2023. If we get another rate hike, the markets are not going to like that. Now, that doesn't mean that they will hike. All right. It's just one member of the Fed. One member of the Fed said that there is potential that we do see a rate hike. The yearly open is low. So, I mean, you're still bullish on the year. Wait, that's not the yearly. Yeah. I don't really know, man. I mean, you're buying it at resistance at the highs. What, I mean, Pioneer Natural Resources Company, has this got something to do with oil? If so, it's not doing anything that oil is doing. Oil is absolutely rocketing. So you're wanting to buy it based off of a yearly open test. Um, Someone asked me this on yesterday's live stream, but their question was more suited to what do you do if prices traded in and out, in and out, in and out? At that point, the yearly open isn't a really good spot to look for trade entries. You could try it. I mean, I don't, if you're only risking 1%, I don't see a problem with it. I don't see a problem with it. But you're only risking 1%. It looks bad. I mean, there's your open on the day and straight down. Straight down. So if you do, like I said, only risk 1%. For a long time buy and hold, I don't necessarily like it. Coming into the fall, natural gas is expected to have a bounce because of the seasonality, right? It's just the way it is. People need natty gas for heating their homes and stuff like that. So it definitely brings demand into the market. But natty gas really has been bouncing around that $2 to $3 area, right? So it's trading sideways. So yeah, I guess if you want to give it a shot, give it a shot. As this is starting to try to structure itself more bullish than bearish, but on the near term, you can look for upside moves on natty gas. But yeah, the yearly open on PXD, that one, yeah, I mean, give it a shot, right? That's all you can do. But it's been traded through multiple times. Look right there. Right there. It should have held. It didn't. You got the bounce for like 3 more days down and then up through it, then back down through it, then up through it, then back down through it, back up, back down. You know what I'm saying? Like, it's not actually acting as resistance or support, and it hasn't all year. It's not going to change my analysis. My analysis is this thing is not something that I would be looking to buy, but that's just me. I structurally and with the rules that we usually adhere to, yes, you can take a shot at this, which I've said. As long as you don't risk no more than 1%, go ahead. But you got a lot of bearish momentum coming into that level. A lot of it. So you need to see buyers step up and step up in a big way. So would I take it today or would I wait a day and see if this actually holds a support? I would more likely wait. Whereas I'm different than other people, right? If this was the first test of the yearly open, I'd be all over it. But since the yearly open has not done much in the way of keeping this asset or even giving you decent trades off of it, that's what you need to look at. Like, there's 4 times there this year that the yearly open did not provide a decent trade. But if you're only going to risk 1%, take a shot at it. You never know, right? We don't know what price is going to do. This move right here could bounce up to 239, right? No one knows what price is going to do ever. But structurally on the weekly and stuff like that, you being yearly open, yeah, I don't see a problem with risking 1% on it. I would probably be more keen to wait for a stop run and then maybe look to buy it or something like that. See if you close the daily under the 200 and then bounce back up. Show me that the bulls are at least trying to defend the area before, engaging in it. Because the last 2 days were excruciatingly bearish. I mean, you dropped from 240 to 225 in no time, bro. What, 5 days? 1, 2, 3, 4, 5, 6. 6 days. You went from 240 to 220. So it moves. DXY. Absolutely. So I am positioned more long DXY with the fact that I'm long USD versus the pound. I'm long USD versus the Aussie, and I'm long USD versus the Swiss. But 9 straight weeks up, a pullback was, looking like it was going to be on the cards, but I mean, it's almost liquidated that high over there. And if we go to the monthly chart, you're going to see that this is a weekly resistance level here, but there's that monthly high. Like, you got, what price is this? High 105.89. What price is this? High 105.88. So, I mean, you could call that a double top for sure. And the DXY looks like it is running right up to it. Will it hit it? I have no clue. Today, it doesn't look like it's got a lot of momentum. Yesterday, it did. right? Yesterday it did. But the markets could roll. This could be the bottom of the markets for this week. And if that's the case, then this could be the top of the DXY for this week. We got one more day of trade after today, and we've already breached any expected move pretty much on everything. The DXY clearly is not got as much bullish momentum as it did have, as you've just been tagging oversold and pulling back. One could argue that right here you had bearish divergence because price is higher and the RSI was lower. But you didn't get the play. The trade didn't work, right? Those two peaks are definitely lower, whereas these two closes are definitely higher. So you didn't really get that divergent play. But it is running out of steam. I mean, it's unfathomable. I was extremely bearish on the dollar, especially once it broke down and made fresh yearly lows. But once we took out this monthly candle's high, I became very bullish on the dollar because this is a rejection. All right. It's a rejection. Price traded down, broke down below support, and was unable to maintain the close under support. And then you opened the next month and went straight up and took out this whole candle. So that's a rejection, a big rejection. And once I seen that changed my bias on the dollar. Not because of the moving averages on the monthly, just simply based on that this candle completely took out that candle's high. And that's not bearish. When you're taking out lows and making fresh lows, that's typically bearish. Now, if this candle would have traded up to, say, 102.94 and then started to roll back over, I would have still held on to that bearish narrative for the DXY. But look what happened right there. Let's even go back and look at it on a daily basis and see how that played out. So that would have been right here, right? That's that monthly open. You can see that it held for one day. It tagged it there and fell. Next day open, put in a small downside move, and boom, yearly open test. And then it acted as support, support, support. You see that? So this whole move right here is when I changed my bias on the dollar. That monthly open was supposed to hold as resistance. It did not. And then once it broke through, it just, see ya. And here we are today, $3 higher. So it is pulling back, it looks like today, but it could pull back to the open and rock and roll right back to the upside. But the markets may be finding a low down here. Maybe, all right? It looks like it's starting to get a little bit of bullish momentum. But we're going to watch this line right there, that purple dotted line on both the NASDAQ and the MES. And if the dollar just, liquidates that low and then finally starts to turn back around, then we will take a short position on that MES futures contract. This is important though. Whenever you get a big breach like that, you don't necessarily want to be getting short down here. All right? Look at this big breach right here. And then what happened the very next day? It went right back into where the week opened. And then traded sideways on that final Friday. So whenever you get a breach on Thursdays, be very careful. If you get a breach on Monday or Tuesday, that's different. Like here, right? You got a breach on Tuesday and you pretty much stayed above. Here's one where you got a breach on Wednesday, Thursday, and then Friday you had a push lower, but that was that CPI low. That's what made that low. And then we came right back up. This is going to be your CPI high right there. Came back up, liquidated that CPI high, and rolled right back over. So, yeah, I'm not gonna look for shorts down here. But if it does reject at at the VWAP, like right now, it's testing it. If it does reject here, then we could have another trend day down. If it gets above it, then it's not going to look like a trend day down, right? It is still awful low, but we haven't tested it yet. We haven't tested it yet. We did test it on the NASDAQ, so we'll keep our eyes peeled here. And dollar's making fresh low there. I don't know why Thinkorswim does this with the dollar. I would rather look at the dollar on this chart. Yeah, so you have made a fresh daily low. So you made a fresh daily low on the dollar. So does it continue down, or does it find support down there and go back to the upside? This hourly looks pretty good so far. It's a strong hourly, but it's still inside of the previous hour's candle. So it's still a very much shortable event, but I'm trading the MES, not the NASDAQ. The NASDAQ moves too much, too fast. It's too hard to manage risk on it, even with just one contract. If you have a large account, you can do that, but with a small account, not so much. You could be down quick. Let's go look back at the Magnificent Seven, though, and see if they're all still red. All but Netflix. And Microsoft is up now. Apple is up now. Apple is the biggest part of the market. I mean, Apple's market cap is bigger than 3 or 4 of these things put together. Apple is a huge, huge part of the market. Also, we need to see what does the market look like. Not the heat map. Index watch. And we'll just do the S&P 100 because those are your biggest stocks. Well, there we go. So we have 71 stocks declining, 29 of them advancing. FDX is up big on the day. And that's pretty much it, right? The rest are all under up 2.25%. So this is your outlier on the day. But you got several. Cisco that's down big. Avgo's down big. Amazon down big. AMD's down. Adobe's down. Oh, I think Brian shorted Adobe yesterday. If he did and held it, that trade's doing fine now. So we need to test a 416.25 to get short. 416.25 will put you roughly in here. This looks like it tested it, but it didn't. It did not test it. See, it was very far away from it. The volume weighted average price goes down with price usually. And also it doesn't always work. The volume weighted average price. But it would have been okay for a small scalp, maybe. 414 down to 410. That's a 4-point move. That's not bad for a scalp. But what we want to see is we want to see a trend day. But we've already made a pretty big move to the downside. The dollar did make another push. So we'll see. We'll see what happens here. A lot of people will switch bullish based on the EDR bands. They'll buy this as a 21 test, thinking that the market is done going down and that, it's so far out of the realm of where it's supposed to be. At 107 on the DXY, yeah, but I mean, I think it would need a pullback. But I mean, one could argue that it kind of sort of already got it. It's just, it's not acting like it wants to have any kind of bullish momentum today. So I'd watch 105.06. That's going to be support first and see if it holds. If it does hold, then yeah. Yeah, if you get above that, that's that double month high, if you will. 107 would be definitely in the cards. And oil is up 1.5% on the day. You got a bullish engulfing there. Not quite a bullish engulfing, almost. But I'm on the same camp with oil. I'd like to see something like this happen again. But that's almost a perfect measured move right there. Right? There's your expansion. There's your pullback. There's your expansion. I mean, you don't get any prettier than that as far as yeah. I mean, it's beautiful. It's almost perfect. Let me get where's the trend line at? There it is. So and then you just take this up to the lows there. So for an absolute perfect move, it would have had to hit $95 on oil. Measured move, not expected move, just a measured move. And I missed the majority of that. I got out of the long trade on this candle right here because it was coming into resistance. That's just the way I do it. And since I was long with a call on only one, there wasn't no way I could take a partial profit and let the rest run on it. If I'd have bought 2 contracts, I could have. All right. But 2 contracts are expensive because this thing moves too. Oil futures move, baby. Bitcoin's down 2%, but looks like it is trying to hold so far. We'll see if it holds above support today. A close under this line isn't going to look good today or tomorrow. And still 27,223. I mean, even if it were to get back up there, I would still be looking for shorts. Just in case the market does a massive correction here. Because I think most people are bullish. Still. Let's go. What is going on? Yeah, a big gap down on the SPY. That's a breakdown out of that. I don't know if you could say that this could potentially be a trap even because of such a great big breakdown. Where are we at on this? So not yet, hasn't tagged it. How long have we gone on? We've done an hour. So if you got a question, let's go ahead and get it in since the internet's not working so great today. We'll wrap this stream up. Yeah, no, I accidentally muted the mic there for a bit. Bitcoin's Monday's low. Yep. What's up, everyone? Hope you're having a good day. You too. USD, a Mexican peso. The reason the USD Mexican peso is going down or was going down is I believe it's because of the differential in interest rates. USD Mexican peso has a 12% interest rate, whereas the USD only has a 5% interest rate. So obviously the carry trade was to the downside there on USD Mexican peso. And Mexican peso still has a 12% interest rate. So as long as you have such a high interest rate, it might behoove one to actually look to short pops until we get an actual trend change or the beginning of an actual trend change. So what would we need? We would need to see the 21 exponential be crossed and held as support. So we did get that breakthrough 2 weeks ago, but then we closed right back under it. There's not a price level up here. The only level that one could watch would potentially be the midpoint of last week's move. So roughly around 17,321.68. That could potentially be an area to look for short entries. Like I said, if you start closing weeklies consistently above the 21, then you have a potential trend change. Potential trend change. That's when we pretty much will change our bias from bearish to bullish. But since you broke it and then closed below it the very next week, I would be looking for shorts on this just because the interest rates are so bad. It's 12% to 5%. So there's actually a better carry trade to the downside on this asset than there is to the long side on the USD/JPY. So I would still be looking to short it, even though it's had a massive move to the downside. It's just all about that carry in FX sometimes. All right. It had a nice run to the upside and then it just reversed. It's hard to believe that, the Mexican peso could be stronger than the dollar. It has nothing to do with that, right? It's where can we generate alpha? Where can we park $2 billion and generate carry, right? Remember, they're not looking for, massive gains on that money. They're just looking to put their clients' money in a safe, they don't do it levered up, right? They're not levered up. They're not 50-to-1 leverage when they put their money in there. They're just parking their money in there for the carry. So if the price goes against them a little bit, it's okay. Eventually, other firms will park their billions there just for the carry. And this is what happens, right? You get an outsized move to the downside. So as long as the Mexican peso's interest rates are much greater than the US's, until we see what can be confirmed as a potential trend change, I think you look to short this. That's just my opinion. Be very careful shorting this or trading this period because this is on Oanda. You still got a 52 pip spread. 54 pip spread. So, the pips, they fluctuate big. So be careful. But it's still easy to manage risk on it. You could still take the trade and only risk 1%. Let's look at what the daily looks like. These are all old levels. I'm not sure if that's going to be old monthly demand. It is. So, and this is the first time you broke down through it. So, yeah, this could be a good area to watch. So, if we get back up to here, there is a very, very tiny inefficiency up here. So, one could argue that price could potentially come up to here and then drop. But like I said, until we're consistently closing at least 3 weeks above that 21, that's when I would start looking to the long side of this thing. As of right now, nah. I doubt I could get the sentiment on this. We can look. That's why right there, that is bad. I gotta call them. It's 2 days in a row. Let's pull up daily effects and see if we can get a sentiment reading. On the USD Mexican peso. There it is, but it's not giving me the sentiment. It's not giving me the sentiment. I like when I can actually see it. Let's see if we can find it on here. Probably not. Yeah. No, I don't see it. Yeah, I don't know. Wes is really good about finding those crazy pairs, sentiment on them, but I can't find it. There's always bullish sentiment on silver, Bitcoin, and gold. Always. 79% of USD JPY participants are net short. I would definitely not be shorting USD JPY. When you have almost 80%, they're going to probably be wrong. Retail's right occasionally, but maybe for a day or two. But I think it probably will find support. Remember, tonight is the BOJ. So this whole down move today, tomorrow you could wake up and it can be up here. So if you have shorted USD JPY today at the resistance or anywhere around the daily high, make sure you take profits on this move. Do not expect continuation. Now, if the BOJ comes out and does something absolutely crazy, like, yeah, we're gonna stop our yield curve controls and we're actually gonna hike interest rates and this and that, then I could see a bigger dump. But right now, with the sentiment being so damn bearish, I would leave it alone. I'm short, but I got short back over here, right? So I've already taken profits off this trade many, many times. Many times. That was a very good trade for 2022. 23, I just completely let my bias get in my way because I had a bearish dollar bias, but I forgot the fact that the carry trade is very attractive still on USD JPY. Any pullback to support, especially if the BOJ does nothing, this will get reversed probably. And also the dollar is pulling back, so we may not get that short here that we're looking for. We were looking for a short there, but the NQ's blasting right through it. All right. Here, let's just go pull it up. We can take one shot at it. I don't see why one shot would be bad. So what we're going to do is we're going to look to get short the NQs right here in just a second. We're going to sell to open one contract. One. Let me wait and see if it starts to reject a little bit. I don't know if you will, seeing how you've gotten such weakness in the dollar all of a sudden. But we can try it for a scalp. I would love for it to liquidate those swings. We'll give it just a second and see what it does here. Good morning, Janet's thoughts. How are you this morning? Yeah, yesterday was a great day, for sure. Absolutely. I just wish I could have gotten short Bitcoin. That would have just topped it off. Would have been the creme de la creme. So it looks like it wants to go back to the upside here. Remember, if we get a wick through these three wicks, or at least that tallest wick, and then a drop back down, we'll take the short. But we will be quick to jump out of it. And I mean quick. Because this will change the entirety of the trading day. I've seen it happen so many times where it gets back above the volume weighted average price and then people just start buying it. The algos kick back up. Sell 15019. All right. We'll see if it gets a fill, but like I said, we're going to set this automatically to buy to open, but it'll switch to buy to close upon a fill. If I get filled, this should change to buy to BTC because we're looking to go short one contract. -1 means you're looking to sell it. And then this will switch to buy to close. And we definitely want that on market. And we'll go ahead and get prepared. I know I cannot buy against the same symbol. I'm just getting ready. Because I have a feeling I'm going to get filled on that. How many points is that from there to there? 03. Yeah, that's a 20-point move. That's what I mean. Like, whew, the NQ is scary. It moves quick. We're only up $11 today because of that call, that short call. Let's go. Give me a fill. The dollar rebounding a little bit. 5-minute candles don't really matter that much, especially when they're not closed yet, too. Like that could just be a wick and it could close red. But the hourly looks good on the MES. The hourly looks like, but it hasn't tested the VWAP yet. Only the NQ has. So sell the EMS based off of the 20, the 21 exponential? Probably not. I think the VWAP would be better. But it doesn't seem to want to get back up there. Like, I would be taking profits now at this point. Or closing the position. I'm not exactly sure on the pricing on this. Like, how much is it per tick? Is it like $1 per tick? Be $4 per. You can do the math. It'd be $80 loss. And it can go. I mean, they can straight move. That's a pretty good size candle there. 68 up to 13. It's a pretty big move. I like it better when we're able to short stuff like that. And then watch price just run away. I mean, the S&P 500 is hanging down here on the lows for the majority of the sessions. It may be a trend day to the downside, just not giving us an entry. I like to try to be perfect with it. I'll watch it go because I have that short call. So I don't have to rush into a position. I don't have to rush into losing money. I don't like losing money. If I'm not 100% certain on the trade, then I generally will not take it. I'm risk averse like that. So now the VWAP has gotten lower. So now I would need to move that limit sell lower. And I don't like that because those highs are still up there. We'll see if it bounces from there. $15,005. Yeah, it looks like we've missed the move. Looks like we missed the move. That would still give me almost an 18-point stop. That's not good. Yeah, we'll go ahead and close this. It's just not going to do it. I probably should have shorted it there, but I assumed we were going to at least throw a wick above that. Maybe catch that supply right there, right? but it didn't do it. All right. So that's pretty much what I'm gonna do the rest of the day. You know, I'll try to maybe get a scalp because I haven't placed a trade today. Zero trades. When you wake up and the market's already made its move, I generally don't want to chase price, which is what I'm doing essentially when it's already had a big down move. The fact that the dollar pulling back so deeply as well, not really. I mean, they don't trade 100% inversely to one another. All right. They can go up with the dollar going up. It just depends on what stocks in the index are doing. And those are going to be the Magnificent Seven. But the dollar yesterday had such a nice big bullish momentous move, you would expect to see bullish continuation today. And only 3 of these are up. Apple's come off a little bit. Apple was up a little bit more than it is now. If Apple was to come off and become bearish again, the S&P 500 would have probably a trend day. Microsoft, big move today. But Goog's down, Amazon's down. Meta is not so much down. I wish I didn't. I got to wait one business day, so tomorrow I'll be able to put on a spread. So hopefully we get a nice little pop up today on Meta. And then what we will do tomorrow is look for a spread ahead of earnings. We'll look for an in-out spread. We'll probably buy the wherever price is at. Will determine which strikes we will buy. But these are $2.50 wide spreads. So if you just go 2, that's a $5 wide spread. You'll have a max profit of 265 with a max loss 235. And then you could set a limit order to where I only lose 60. No, it'd be more than that. It would be $100 because the P&L is up at 1,000, so 1% of that. That'd be 10%. Sorry. My math is all crazy today. It's not. My head's not working. But that's something what we'll do on Meta if we get a pop. Only because it hasn't suffered as much as the others from the highs. It's only down 9%. Whereas Apple from the highs is down what? 11%, but Apple has a much larger market cap, so this is down about 10%. I guess Nvidia is the one that's had the biggest move lower. We'll check Tesla, 16%. Maybe Tesla then. Maybe we'll do Tesla. Let's see if we can build a spread on Tesla that looks better than on Meta. Tesla just freaking moves. I can't believe we're already 21 days. It doesn't have as attractive of a risk to reward on it. You'd be risking 248 to make 252. That's a $5 wide spread because it's going to cost 250. The general rule of thumb on these spreads is if you're staying within $5 wide, it's better if you can get them for like $1.30, $1.40. You know what I'm saying? And then get a max profit of like 250. But on some assets, you just can't build them for that. You just can't build them for that. That one has a bigger max profit, but a much larger max loss. And I don't want to lose more than like, I don't know, $60, $70 on any one trade. Because that would be like, 1% ish. And that's where we want to hold them. All right, guys, you guys have a fantastic rest of your day. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.